It's about that time of day again. My name is Joseph. It's Monday evening already, October the 2nd. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish with a spike in range, which tells me to look for selling opportunities up above the range using that battle zone and the 2-try rule tomorrow. The S&P is bullish and rotating inside a beautiful bull channel, and a recent measured move target tells me to look for a 2-legged pullback before we retest the high on Tuesday. Speaking of Tuesday, Nasdaq is bullish with a spike in channel, telling me to look for buying opportunities using traps in the battle zone tomorrow. And of course, gold is bearish with a spike in range, so my plan is to look for the 2-try rule to sell above the highs of the range with a measured move target tomorrow. And of course, the euro is also bearish with a spike in range as well, which tells me to focus on failures to sell above the range with a target down at the prior month low on Tuesday. Boy, speaking of Tuesday, I have a great newsletter setting up for tomorrow. Got a great plan of attack. We had some big moves here this beginning of the week, beginning of the month, and beginning of this final quarter of the year 2017. This year is flying right by, but we're only as good as our next trade. So let's make sure we jump in and put the plan together here for tomorrow. Before we jump in though, don't forget, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link inside the YouTube description and come join me here on the blog at Sideways Markets so you can catch the full-length version of this newsletter video. While you're here, don't forget, join the mailing list. I'll send you an email every evening when that newsletter goes live. Follow me on social, lower left-hand corner, whatever your flavor of choice, Stock Twits, Twitter, Facebook, LinkedIn. Make sure you follow me throughout the week for important charts, links, and updates. And speaking of charts, how easy is this? All the charts from tonight's video, you can have them on your computer for tomorrow, right where it says click here to download today's charts. Follow that link and be ready for tomorrow's session. And speaking of tomorrow's session, make sure you grab that free pass. Finish watching the video first, but once you're done, grab that free pass. Come out and join me this week as a guest in the trade room. You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And if you have any questions, don't forget, I'm always here to answer your questions. Hit me up on live support on the right-hand side of our website. Let's jump right in. We got a busy day tomorrow. We got a brand new week, a brand new month, and a brand new fourth quarter of the year 2017. I've been saying this for a while. The months of September and October, this is where we transition into the best time of the year to be a trader. Starting off tomorrow's Tuesday, of course, October the 3rd, we have a little bit of news coming out overnight. We get the Royal Bank of Australia going to be posting their announcement tonight at 11:30 p.m. Eastern Time if you'd like to trade the Aussie dollar, or of course, right, any of the mining utilities come out of Australia. Make sure you're watching that in the overnight session. That shouldn't be too big of a market moving event. Tomorrow we go into Tuesday's session and there isn't a lot on the calendar. We got construction spending there at 4:30 a.m. and that's pretty much all we have on the calendar here for tomorrow. Of course, London opens up at 3 a.m. The U.S. morning session opens up at 8 a.m. Not a lot, right? Not a lot around the opening bells tomorrow. So, of course, pretty much your standard operating procedure. We'll watch the top of the hours at 8 o'clock, 9 o'clock, 10 o'clock, and 11 o'clock. And of course, don't forget, I'm going to be opening up the trade room tomorrow morning at 8 o'clock Eastern Time, and we're going to trade this plan together. So not a lot of news on the schedule for tomorrow. We've got a wide open day, so we're keeping an eye on the opening bells and, of course, the top of the hour as well. And we'll put the plan together tomorrow morning at 8 o'clock Eastern Time in our trade room. Let's put the charts together here tonight. We got crude oil, S&P, Nasdaq, gold, and euro, and we'll wrap things up and send you off for your Tuesday session. Starting off tonight with crude oil. Crude is bearish after collapsing lower today, settling around the prior week low. Although the range may not be perfect, this flat moving average and this lifeless personality is a clear giveaway. The prior week low was the focus of this move going lower, and this range simply now is developing around it. As with all trading ranges, my goal is to focus on failures to fade the breakouts using the 2-try rule while keeping an eye on a possible breakout, right, that may send us back into the range we came from earlier this week, right? If you recall, we ended last week in a very, very tight range-bound market. I'm not going to waste my time or your time trying to anticipate, trying to figure out why this market dropped. There's a lot of different news headlines that were cherry-picked right early this morning. The bottom line, though, is a very strong move down, and of course, we assume that strong move down, right, is all the way down to that prior week low, because you'll notice they didn't get to that big round number at 50. So we assume the prior week low was the objective. We assume they were getting sucked back down to last week's low. Now here we have a strong bear move lower. If these bears can't keep this price lower, it does threaten to go right back to where it came from here tomorrow. So tomorrow's got a lot of potential to be a pretty good day for us, right? Lots of different opportunities. Now, with that said, I'm not going to worry too much about the actual qualification of the range, but it is pretty obvious. Strong move down, going sideways now. I want to focus on selling high with a target going back down to that low. I also want to focus on avoiding, right, trying to sell too low tomorrow. Your typical trading range environment, and we're going to see a lot of this tonight on the newsletter. Strong move down into a sideways range. Really, there are two scenarios you're looking for at this point. The first one being the two-try rule to sell above the range. Buyers go up once, they try twice. If and when they fail, we look for selling opportunities going back down into that range. Once the second attempt from the buyers to break out of the range fails, we then look for the sell going back down to that low. The hard part is when it goes back down to that low, I gotta be really careful trying to sell down here, because a lot of times it'll break down, one try to go lower, two tries, and then it'll shoot right back up into that trading range. This is where buyers can participate. It is a bear market though, so just be aware that's going to be lower probability being a buyer at the low of that trading range. What I'd rather see is I'd rather get what I call a successful breakout pullback, and that means moving average clears below the low of the range. Let's extend out that range a little bit longer, right? It's called a successful breakout pullback. Moving average clears below the low of the range, right? Get below the low of the range. Then there's a two-legged move I'm looking for. Strong move down, 1, 2, for a trap high. That's the breakout pullback, right? That's the successful breakout pullback. I have a nickname for this pattern, right? The nickname is called the fake out breakout pullback pattern, right? The fake out breakout pullback pattern. I know it's kind of a mouthful, right? Kind of a mouthful, the FOBOPB. But the bottom line is I want to avoid getting sucked back up into that trading range. I need to see a lot of strength to the downside if I'm going to be confident trading below the low of a trading range in a bear market. So step one, get the moving average below that low, right? Get the moving average outside of the range. Usually that requires enough strength breaking below it, right? To get the moving average below it, you've got to really break below that range pretty strong. That's step one. Then step number two is going to be one move up and then a trap high. I want some sort of trap high here. And the reason why I want that trap high is I'm trying to anticipate buyers trying to buy that first attempt failure back into the range. Once I see that strong signal from the bears at the moving average, then I know, right, I can get my selling on, right, back to the downside here. So I call it the fake out breakout pullback. I've done many tutorials on that on our YouTube channel and our blog over the last few months. Make sure you check those out, right? And obviously don't forget, you can always hit me up on live support if you have any questions. That's the basic scenario. Now, when we talk about crude oil here, direct your attention now back up into that range here, right? Go back up here. This is where things can turn into a bull reversal, right? So watch for that second try to hold. The buyers might be able to take control of this market tomorrow. As of right now, it's very much speculation. We'd have to see the market go up, one try, two try, and successfully hold that second try if we're going to call this a bull market. So here we are. Strong move down, going sideways here. I'm looking for one try, two try to sell back down in. Once I see that second attempt failing, I'll look for that sell back down in. And there's a lot of different ways in which we can time that entry more precisely, but it all revolves around that one try, two try. Then as we go lower, right, this is where we have to be careful, especially with that big round number of $50 a barrel. Want to see that moving average get below, strong move down, two-legged trap high, right, and we're off the races from there. See how I can draw that out? Moving average gets below the range low, right? That requires the market to break down really strong, right? That requires a real strong breakdown, strong enough to get that moving average outside of that trading range, right? Then I look for that one try, right, trap high, two tries. Because again, what's going to happen is buyers are going to try to buy that pullback and send it back in. I want those buyers to be trapped, right? And when this thing fails going higher, I want those buyers to have to get out of the way, right? That way, this will throw gasoline on my trade going short. Maybe there was a pun intended there. Yeah, there was a pun intended there. A little gasoline, little oil joke. All right, let's keep going. So bottom line is sell high, be very careful, selling low tomorrow. How do we turn bearish tomorrow? How do we turn bullish tomorrow? Pretty simple. One try, two try, second try, keeps going. Now, at this point, you've got to know where their objective is. Their objective will be to get back up into that range. Specifically, the objective will be up at 51.77. You'll notice I'm drawing in this little hidden channel here right now. Don't pay too much attention to it yet, but once we get that 1, 2, once that second attempt breaks out, yeah, now that channel becomes a big deal. Mark up that prior level of resistance, mark up our level of support, right? Now that becomes my battle zone, and now I'm looking to be a buyer on that pullback. Relatively simple. The hard part's going to be don't try to predict the reversal. Wait for the reversal because that's going to give you the most reliable trading opportunities. So what if price goes up? What if price goes down? What if price sits here? We're sitting right on top of that prior week low. What if it sits here right now? If it sits here, not much changes. We may see a short-term trading range, and if we do see a range inside of a range, we'll use these swings, obviously, for one try, two try, and back down, right? So not a lot changes there. So watch for that range developing around that prior week low. And I will definitely be focused on the bear side, but I'm never married to one side of the market, right? Neither should you be. It doesn't matter to me what direction we trade. A chart is a chart is a chart. Right now, the bears have control. They're going sideways. If we do see strength to the upside, I'll gladly be a buyer. We'll have to wait for proof. Don't forget, we'll be trading this market tomorrow morning in our trade room, 8 o'clock Eastern time. Hope to see you guys there with all of our advanced members. Let's keep going. How about some S&P? S&P is bullish with a wide bull channel and a recent measured move. The bull channel tells me to stay patient and wait to buy into the lows of that channel, while the measured move tells me to expect a two-legged pullback off the high and a retest of that measured move tomorrow. Here is everything good about a trending market, right? This is all the good stuff, right, that we talk about every day in our trade room. In a trending environment, we look for channel rotations and measured moves. As you can see, that's exactly what we got today on the S&P. Price goes up, pulls back, up, right? That creates our beautiful bull channel. Now, one of the things you'll notice about this bull channel, it's not a 45-degree angle. It's not a real steep channel. It's decent, right? But it's not the strongest thing in the world. And it's also relatively wide, right? Now, we've talked about this before on this nightly newsletter. Whenever we have a really wide channel, what does that tell me? It tells me that both sides of the market can participate. And when both sides of the market can participate, that means I got to really focus on buying as low as possible if I'm a buyer or selling as high as possible if I'm going to be a seller, right? So that's one thing. That's the first thing I thought of this afternoon when I was typing this up for you guys is make sure to tell these guys and gals with a flat, almost, with a wide, almost flat channel, you really got to focus on buying as low as possible or selling as high as possible because the opposite side of the market is able to participate in a move like this, right? If the channel was straight up, if it was a relatively steep, narrow channel, only people who can trade this environment are buyers. You can't make any money in that environment as a seller, right? Think about it for a moment, and you'll see. only way to really make money in that environment is to be a buyer, right? Buying pullbacks. But if that channel gets a little bit flatter, right, and a little bit wider, now all of a sudden see how both sides of the market, the buyers can buy it on the way up, the bears can sell it on the way down, right? Buyers on the way up. So the bottom line is that I want to really, really focus on buying as low as possible, because if I try to buy up near around these highs, what's going to happen? I'm going to be just simply filling the pockets of those bears. Ton of movement here, brand new week, brand new month, brand new quarter. I've been saying this for the last few weeks here. This is now, the pendulum now begins to swing into what I've always seen as the best time of the year to be a trader. Want to learn more? Want to come out and join me as a client in the trade room every day? We open up our trade room every morning with our advanced members at 8 o'clock Eastern time. If you want to learn more about what it means to be an advanced member, follow that link on the homepage of the website. Or maybe you want to learn more about our strategy before you dive into advanced membership. Grab that free trial, learn the who, what, where, when, and why. Learn more about the analysis tools we use, the markets we trade, the times we trade, the patterns we use. It's all covered for you inside that free trial. And don't forget, if you have any questions, I'm always here to answer your questions 24/7, 365. Hit me up on live support on the right-hand side of our website. If you're watching the video right now on our YouTube channel, not to worry, there are links in the description of that YouTube video. If you're on the blog at Sideways Markets, there are links everywhere on the blog to join our free trial and to learn more, and I'm always here to help every step of the process. My name is Joseph. Hope you guys had a great weekend out there. It feels great to be back here, especially in a brand new month of October. I'm going to remind you, Halloween is only a few weeks away. You don't be the last one out there digging through the bargain basement. Halloween costumes, better get them fast before they're gone. Not to worry, though. I'll be back again tomorrow, and we'll do it again. Trade room opens up tomorrow, 8 o'clock Eastern time. I'll see you there. If not, we'll do the newsletter again tomorrow night, same time, same place. Bring some friends next time, will ya? Adios, amigos. Bye-bye for now.